Execution needs strategy for practice. It has never been more true. If you're trying to build without AI, you are just shooting yourself in the foot on day one. It's foolish at this point. It's still a highly volatile environment, and therefore, when you have to act with a strategic thought, but the action has to be very, very fast. We have never seen this level of volatility in macro, and that has really translated into how companies are built, how companies are growing.
We are seeing a seismic shift. 50 years it stayed in this sort of classical era. Finally we're starting to address fundamental issue, and this is not just consumer to consumer cross-border payments, this is the B2B flows.
Global trade is being reset.
So ladies and gentlemen, welcome to today's episode of Couchonomics with Arjun. Joining me all the way from the Bay Area, I'm excited, we have another, I guess, American guest on the show, is Sandeep Patil. Sandeep is a partner with QED, and a little bit more on QED in a bit, but he heads Asia Pacific. Earlier this year, I had the opportunity to meet him in Asia, in Japan to be specific. So I kind of pinned him down and I said, you've got to come on my show. He was kind enough to accept the offer. Sandeep, welcome to the show.
Thank you for having me. Always fun to talk with you, Arjun.
Pleasure. I thought maybe I'll give a bit of a context on QED for people who don't know, and correct me if I've got this wrong, right? So you're a fintech-focused fund. You are headquartered in the US. You have $4 billion asset under management, 250 portfolio companies. But what blows my mind is that you've got 30 unicorns within that.
Yeah.
So the hit rate is crazy. You've had some of the best known sort of fintechs in the world within your portfolio, whether that's Nubank, Klarna, SoFi, Credit Karma, and others. And what I loved was your tagline, which is operators backing operators. That's kind of my tagline in consulting, where I say, I'm not a consultant, I'm an operator who's consulting. But have I got that right?
That is correct. That is correct, Arjun. Bunch of us come from Capital One. So our managing partner, Nigel, was co-founder of Capital One. I myself was at Capital One back in 2000 to 2006. A good chunk of our partners are the same way. They spent half a decade, couple of decades in Capital One. So fintech is, and I would argue that Capital One is the first fintech. It was data led, it was technology focused, and it was customer first. Digital distribution, strong analytical background to do underwriting and everything concerned with account management. So we built Capital One up, and then our thesis was, if we can do this for credit cards in the United States, why don't we try to do this across financial services across the world? And so we have gradually, US was obviously our home market, then we expanded into LATAM. Funny story is Nubank was our first check into LATAM, and the rest is history. UK always was a spiritual second home. Nigel is British. Bunch of us have worked in Britain for a while. I'm myself a British passport holder, spent 15 years there. So Britain we have invested in. And then from 2020 onwards, we started expanding east of Europe, right? So India was the next big place. Over last 5 years, we have invested about 225 odd million in Asia Pacific. That's across funds 6, 7, and 8, and SPVs that we have raised. And our expectation is that we'll probably invest another 250 or 300 million in the region over the next 5 years. So we see this as a fast growing region in the world and one of the key geographies for us going forward.
So it's awesome. So you've given me a lot to sort of talk about. I think that frames it up. I've got two questions. A, Visa is going to disagree with you of being the first fintech, but we'll take that conversation another day. Secondly, were you working in the offices in Richmond?
Yeah. So Broad Street.
I visited them quite a lot because I used to drive down from Washington D.C. to University of Virginia, and Richmond used to be a stop. I think I must have been to your offices a few times, but I guess our paths didn't cross.
Yeah. It was
so here's my first question, Sandeep. State of the fintech nation, but I've got two other questions to put to you along with that. One, are we really done with the reset or not? And secondly, where do you really see value coming out of fintech in the next sort of 3 to 5 years?
Yeah. So look, I think, are we really done with the reset? That is an evolving question, because the question itself gets reset with the kind of macro disruptions that we are seeing, macro changes that we are seeing, right? I think 2022, 23, 24 probably were definitely the down cycle globally. Certain markets did well. As you know, India did well during that time. 23, 24 was terrific time for IPOs in India. 25, from the looks of it, looks to surpass it. Middle East, UAE in particular, has been doing phenomenal. I mean, the capital flows in the region are fantastic. We have seen a tremendous amount of energy in startups in the region as well. There are aspects of US that are doing really well. Stablecoins has taken off in a big well. Circle IPO certainly was a catalyst there, but stablecoins as a theme has taken off in a big way. In LATAM, we have seen increased activity for parts of that region. But what we haven't seen is a wholesale recovery of the vertical globally, right? I would like to think a lot of it is also tied down to the interest rate cycles, because lending at the heart of it is probably 50-60% of profitability. And so even if a fintech doesn't do lending directly, they might have sort of their claws into it and might be anchored to it, right? So I think probably we are closer to the recovery than we were probably 6 months, a year ago when we met in Japan. But we are not there yet. I think there is another probably 6 months, a year to go before the cycle recovers, and that's assuming no other big disruptions. Of course, there's a lot going on around the world, as you know, so that might change all of this.
And where do you see value coming in the next 2, 3 years from your perspective?
So look, I think globally, if I look at it, stablecoins is a big thing that we are going after. We think it will be quite disruptive. It is already being quite disruptive in cross-border payments, in how global elites use their wealth, such as yourself, people who are geographically mobile, spend in multiple geographies, hold assets in multiple geographies. For all of them, I think stablecoin becomes a magical tool. So we see that theme growing pretty well. I think some of our peers, my old peers and your current peers, have put the number as like 500 million people using stable coins over the next 2 to 5 years. One wonders how anchored that figure is, but regardless, I think it's going to be huge. It's going to be very, very significant. And with Genius Act coming in and the regulation in Europe coming in, Genius is more forward looking, but with that coming in, I think the impetus is definitely behind it, from a global tailwind perspective. AI has been a very transformative theme, and so far we have seen chatbots and sort of generic purpose artificial intelligence. I was actually talking to CTO of Google, the search side of it, day before yesterday, and even there, the sense is that LLMs as a generic tool is one theme, but what we really would start seeing are specialist artificial intelligence tools which will solve specific problems. So reinforced learning could be one of them. There are other tools that can go in which will help solve specific problems. And so in fintech in particular, underwriting is a big place where you have structured large data sets that honestly have not been tackled in a very significant way since what we saw back when you used to visit Richmond office, right? Like decision trees and sort of regression models. We haven't seen the next big breakthrough in terms of risk isolation, and I expect that to happen at some point. That can be a big driver of value. I think on the other side, distribution of fintech can be really disrupted by AI. People are moving away from searches. Google has some funny, like very compelling statistics about it. We have seen OpenAI penetration also. India is now the biggest market for OpenAI, or close to biggest market for OpenAI. So distribution of financial services products, among other products, will also change. What AI does is it drives a lot of trust even in the first engagement. And trust is a big driver for the buying decision in financial services, because this is about money, right? So people do want to trust who they're parking their money with, who they're borrowing their money from, and so on and so forth. So I think AI will actually disrupt fintech distribution in a big way. And we should see the next set of distribution companies come out in financial services. Um, those are the main themes. I think if we talk about regionally, then I think global trade is being reset in an unprecedented way. Probably we haven't seen such a reset in 50 years, if not 100 years before. And that will continue to be a theme. Dubai, UAE, where you're sitting, is at the heart of it in many ways. I think a lot of trade flows already intersect at Dubai, but I expect that to only increase over the next 5 years or so as the global trade gets reset. We expect cross-border payments to get reset as a result as well, not just businesses, but also consumer. There might be dislocate not dislocation, but actually the relocation of populations and all of that, and that always comes with a start of redistribution of wealth. I used to live in London till last year. I just moved to Bay Area, and mine was not inspired by this, but I've seen some statistics about how many millionaires have left London recently, and UAE is actually one of the big destinations for.
Yeah, I think we've been the biggest gainers.
Yeah, yeah, and I think that kind of relocation, right, would continue. I think there is a lot that's happening, not just in terms of taxation, but sort of the political, geopolitical, social alignment in a lot of geographies, and that will create some movement. So I expect that to be a big driver of value. And again, it anchors a little bit on the stablecoin theme that we talked about earlier, but there are interesting nuances to this in terms of how do you become a bank to people like Arjun who are globally mobile, right? And so how do you serve you specifically? I think there's a big value unlock coming there.
No, I think it's a show where I'm here to ask the questions, not necessarily give the answers. But I do think we are seeing a seismic shift towards finance coming on chain,
Hmm.
right? And yes, stablecoin is sort of the poster child that most people talk about it, but it's going to format. I think it's very correct that you've talked about global trade and trade finance. 50 years it stayed in this sort of classical era. I think there's definitely seeing some disruption, cross border payments. Finally we're starting to address the fundamental issue, and this is not just consumer to consumer cross-border payments. This is the B2B flows. I think that's which will get disrupted. One sector that I'll throw in, I don't know if you have a point of view in this, is and for me it's a bit of a given as we start to see greater agentic commerce,
Hmm.
right? So the Amazons and the Walmarts of the platform move to sort of an agentic based platform. I think financial services finds a way to embed itself deeper, right? And I think there we should see potentially an emergence of a whole host of newer players who are what I call the next generation of the embedded finance players. So I guess the next generation of the Klarnas, or in our part of the world, the Tabbies of the world, right? I think that'll be terribly exciting. Before I get to AI, and do have a very specific question for it, are a few sectors completely falling out of fashion, which have been quite popular in the recent past?
Yeah, 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 yeah. There are a few sectors that are definitely. I think.
Do you want to call them out?
Um, sure. I mean, look. I think. The traditional finance, right? If you say a lot of kind of underwriting focus that we have seen in insurance, for example, seems to be waning, and it's a function of both things. I think risks have increased, and so that sector is going through a downturn in some shape or form. We have a couple of companies that are doing really well, but those are more exceptions than the norm for the vertical. I think regulation is also evolving on that vertical a lot, and so we are being cautious of that. How deep we go? India, I can call out in particular. Regulators actually said that they are not looking to give out manufacturing licenses to fintechs, and so that becomes a sector that one would be cautious about. Look, I think otherwise broadly in fintech, um, to the extent that you're focused on sort of middle of the pyramid and top of the pyramid, I think the tailwinds are enormous, right? As much as we don't want to accept the income disparity is increasing in the world, and that concentrates profit pools and revenue pools upwards, right? And to that extent, then impact investing and sort of focusing on bottom of pyramid, it becomes more and more difficult. The most interesting outcome there that I'm seeing that gives me hope and excitement. We don't tend to invest in that part of the market given our focus and sort of focus. We have a sister fund that goes more on the impact side of it, but is two things, right? One, innovations like UPI. So when I compare UPI and PIX, and I know we talked about it in Japan also, if
Yep.
I remember, in UPI the regulators have kept the MDR to be minimal. It's very incremental MDR that they're giving out. As a result, what has happened is on a per transaction basis, UPI is the lowest cost system I've seen across the world. Phenomenally low cost execution, right? So to that extent, it is bringing financial vitality to the masses, to the bottom of the pyramid. And so if low cost solutions, large scale low cost solutions continue to become global, that is a big hope that you can actually spread financial vitality through the bottom of the pyramid. The second thing I genuinely believe, because we have seen this happen in semiconductors, for example, a lot, is the cost per query in AI, I think will drop dramatically. It will continue to drop dramatically. And when I say dramatically, it's not a factor of 5 or 10. I'm talking factor of 1,000, right? And when that happens, then we would be able to bring healthcare, we'll be able to bring education to the masses. So that can really, even if we as investors are not focused on it, it won't generate the best financial return. I think there are companies being built with that frame of mind, where you will just uplift the masses, provide them the right tools to uplift themselves, right? To empower them to uplift themselves. That gives me a lot of hope that impact will continue to be a big theme in the world to come. Uh,
No, and I totally agree with you. AI.
hmm.
So every fintech is today an AI fintech now.
Yeah.
Yeah, every AI. So I think they've refreshed their websites, their apps, everything, right? So here's the question, right? In my view, there is tremendous, if I may use, AI washing going on,
Hmm.
right? From an investor's perspective and seasoned operator, investors, what are the telltale signs there that someone's AI washing?
Ah, let me answer the other side of the question, right? So I'm less controversial, which is what are the telltale signs that's a truly AI company, right? I started with AI first. So look, initially when we started on this journey, I'll start with a little joke, then we'll go into reality. Our cutoff was that if it's more than 2 years old and calls itself AI, then washed up, right? So that was the joke within the IC that we used to, at least internally, with a couple of partners, we used to share. Because everyone just had a .ai last name extension, and then the rest is history. But look, I think the where AI comes in, right, with the way we think about AI, especially from a fintech perspective, is we think of it as a tool, right? And so, what does AI act on? AI acts on large data sets,
Hmm.
large customer sets, where there is value in improving the Gini coefficient, right? Where you can really separate something out. That's one aspect of it. The second aspect of it is the cost reduction and efficiency improvement tool. So every engineer worth his salt has a copilot now, right? Everyone in customer support, customer success has an AI tool that handles, and where jurisdictions or verticals enable, you already see kind of compute algorithms taking the call, at least the L1 calls, rather than the support systems. So I think those are efficiency improvements that we see across the board. Each one of my portfolio companies is doing AI in some shape or form. Some of them have really specific experiments. Others are doing it more broadly. Some have hired CTOs or who are AI led. Others have created sort of what do you say, focus teams to drive AI horizontally. Some have kind of drafted people into each of the squad to who are more AI first. So everyone's driving towards AI in a certain shape or form. What really distinguishes AI first companies are people where this tool can be used to deliver the alpha. It's not about beta, it's about the alpha, right? So if you're really data intensive, you're doing underwriting and can show us a differential because you have cracked not LLMs used on languages, but other learning models that can drive it. That's very interesting. Well, I won't name the company, but we had a CEO conference a couple of weeks ago, and one of the founders I was talking to, they have now started configuring user offers on the fly using AI. Right, where kind of when a customer calls in based on the initial service. So if you recall, right, back in the credit card days, that paper application used to be filled out. There's a certain offer that was mentioned upfront, and that's the offer you offer that you give to the customer. So it becomes a static decision in today's world of like specific data points being observed and you decide based on it. Here it's sort of generative, right? Like a customer calls in and says, "Hey, I can't pay my card because I lost my job," and then he or she reveals more details about when they'll be able to repay. So the repayment offer gets configured on the fly on the call, and then the agent gets prompted that, "Hey, you can make this offer to this customer," and that is more likely to be accepted, right? And if the customer wants to think about it or is hesitant to take the offer, then the AI prompts further that maybe we can have another call in this much time at this time when you have this income come in, all of that, right? So fairly intelligent but still augmented distribution through humans of offers, things like that. Those are true AI moments, right?
True,
Yeah,
agreed that. And you're confident that more and more of them are actually doing the right thing.
I think look. Um, So when I went to my undergrad, okay, I'll give you a story, and then the stories are very interesting, right? That's what chats are made of. So when I was thinking of going into undergrad, the big decision becomes, and you lived in India, right? Like you either become an engineer or doctor back in my generation and your generation. And if you choose to become an engineer, then the only significant decision you make is, are you going to do computer science or electrical engineering or mechanical engineering? And I was very keen, I could take all three, but I was very keen on mechanical. And so I spoke to some professors actually to understand which one should I take. And one of them, I forget his name, he had a pen in his hand. He said, "Look, a computer is like this pen. You know, are you going to become a pen engineer or are you going to become an engineer what the pen really sketches?" Right? And for the impressionable 16-year-old, the fate was sealed that I'm going to become a mechanical engineer because the application of computer science will come to mechanical engineering. And credit to him, my undergrad actually bore that out. Like I did, my major thesis was on like a huge Java code and software simulation of something in mechanical engineering. So I would use the same analogy, right? AI parts, aspects of it are becoming like a tool. We will all use AI, right? That's just a given at this point, and therefore all companies would have an aspect of AI for sure, right? It's about, can you harness the precision of AI to generate an alpha? If your business model allows you to do that, and if it doesn't allow it, I'm sure there are other things that you can leverage, right? Go build a great company. But if you're trying to build without AI, you are just shooting yourself in the foot on day one, right? Your opex is going to be higher, your CAC is going to be higher, your turnaround time on code is going to be higher, therefore your feature velocity is going to be slower, right? Your product is not going to be as customer friendly, as customer sensitive going forward. So not building with AI is foolish at this point.
Okay, so this leads me to a very interesting question, right? As an investor, right? What has moved from nice to have to a must have when you're looking at and assessing companies?
Right. um I'll give you a non-traditional answer first, right? So I think the thing I've realized really is, especially in fintech, awareness of regulation, awareness of what's happening in financial services has never been more important.
Hmm.
In last 3 4 years, if you look at outcomes here in the United States, in Middle East and Africa, in India, in Australia and Japan, how much macro has shaped the micro is truly phenomenal. We have never seen this level of volatility in macro, right? And that has really translated into how companies are built, how companies are growing, right? So that's one capability that I explicitly watch out for a founder. That can he or she actually uh, have that lens, right? And at least have a perspective on it, on whatever is happening in the world and how it affects their business, and how do they bring it constantly. Because she is really at the top of the funnel, and so whatever she sees is going to filter down into the company. Second thing is velocity is paramount, right? I think there's, I think Peter Drucker said it, someone said it, right? Strategy eats, execution eats strategy for breakfast.
Yeah,
Uh,
I think it was Drucker.
yeah, but it has never been more true. And the reason for it is because execution has become so fast. By the time you have a strategic moment and you take the depth and you have that board meeting and 3 day offsite and all of that, the world has moved on, right? It doesn't take away the value of all those things. I think this is still a highly volatile environment, and therefore, when you have to act with a strategic thought, but the action has to be very, very fast, right? So, thing I look for in founders is how quickly can they iterate, not just on their product features, but on their customer understanding, their product understanding, where they're positioning themselves across segment, how they're orienting their organization, and how fast can their organization really execute, right? And going back to AI, going back to stablecoins, in fact, as well, the execution velocity is really fast now in the underlying, in the undercurrent, right? So I expect the founders also to move fast.
So I'm gonna have to ask you this question, right? So these are both fundamentally sensible criterias or assessment, evaluation, whatever you want to call them, right?
Hmm.
Why 5 years ago or 6 years ago, when VCs were throwing money left, right, and center, why were these virtuous ideas not there in the consideration? You know, I just explain. I struggle.
Yeah.
Maybe I just don't get it.
No, no, look, I think 5 years ago we were in a different reality. We were in a different universe. We were in the universe of, I'm going to name a company. I hold them in high regard. I own their stock as well. So actually, I'm a believer in it. But we were in the world of where Uber would enter a city and start operating their taxi service, and then expect that as they scale up massively, the regulation would contort to them to suit them, right? We were in a world where Facebook, and Mark had actually said it, right, that we are in a world where you break things fast and build them again, something like that, right? Like we are in a world where the traction was the driver of regulation catching up to it, right? We were in a world where micro could shape the macro. And I lived in London at that time, and I actually saw how taxi laws were reshaped and shaped so that Uber could be accommodated. So I saw it firsthand happening in my everyday experience, right? So we were in a world where micro and some thoughts could drive sort of things so fast and so far that everything else would conform to them. Yes, today also big thoughts can drive things, but I think macro has become so much more important, right? Um, I don't want to overplay the theme, but you can have sort of administration, regulation just come down and thump down on things which don't conform to the direction they are driving towards. So regulation is always important, especially in fintech. It was always important, but there was a case to be made that hey, if this thing really takes off, then we could really chase something, and other things shall fall in place. That no longer seems to be true always, right? That
Okay,
definitely.
so let's double click on regulation a little bit, right? So I think you're very critical in the view. I've heard things, and I do prescribe to these ideas. One is, regulation as an accelerant,
Hmm,
right? So
hmm,
you can actually, and you're seeing bits and pieces of that, right? If the regulation comes across, if you're well placed, you can accelerate. Others have said, let's use regulation as a moat,
hmm.
right?
Yeah.
Now, what do you, as an early stage investor, advise, guide, steer your founders to do that sort of mindset or that sort of way of thinking can be go beyond just awareness and be actually embedded into their business models? What do you look for? What do you suggest? How do you kind of make it a bit more real?
Yeah. So look, where we operate, like the stage we operate at, and so we go Series A onwards, right? It's still companies are quite early at that stage.
Hmm.
They may or may not have explicit a head of regulation, chief legal officer, someone in charge who's actually thinking about these things in a full time capacity, right? So for me, the asset test really becomes the founders. And I would, in the assessment process, if I get serious with you, I would assess deeper about how you think about regulation. How much do you know about it? How important do you think regulation is? And if you don't, if there is no regulation affecting your business right now, tell me what would affect it, right? I don't want you to stay awake at night thinking about regulation, but when you're awake in the morning, you should give a thought to it. You should think about whatever news is coming out. How does that affect you, right? If we had recorded this podcast a year ago, even then we would not have predicted Genius Act, right? We knew that crypto and stablecoins were about to come mainstream, but the acceleration that we have seen in last 1 year is unprecedented. And had Genius not happened, it would not have been this accelerated, right? So regulation is that's the case in point of what you were saying, that regulation is an accelerant, right? And so you want founders who can think about it, because if it's a rapidly evolving world where you can have mass accelerants, then the person who has thought about it, who has a frame of reference to it, can build for it very quickly, right? If I, as I said, we invest from Series A all the way to pre-IPO. So if it's a later stage, like a Series D, Series E company, 3 years, 2 years from IPO, then we expect them to have the forks, right? Then they would have a policy version of things, of how regulation affects them. Probably would have put thoughts into what it means to have a public relations person, what agenda that person is driving, what aspects do they engage in with the administration, with the regulators, on thinking about the impact on their business, especially in jurisdictions where regulation can have big impacts, right? And that truly is global now. But yeah, If you're operating in Europe, things will affect you for sure. Here in the United States, we have seen that regulation is a big accelerant. In India, has been a big accelerant. On in Middle East and Singapore, we have seen the other side also, where regulation has actually pushed growth and pushed innovation in a very dramatic way. And again, they're having the right connect and the right awareness is very important to building a successful startup.
Okay, so here's a yes and no question. So, are you suggesting that in the way QED now invests, you have actually taken regulation far up higher in the pecking order of consideration in the overall themes, i.e., which part of the world you go into, which sectors you enter in?
Yeah, yes, I think that's very true. There are countries where I'm not investing because we don't have a very positive view of the regulation or how the regulators have acted. I would choose not to name them. And then there are companies that when we evaluate in the founder assessment criteria, this is actually a very important thing that I look for. How aware you are, how aware the companies are of the regulatory and macro impacts.
Okay, but here, okay, let me Sandeep, let me, because I guess I'm a consultant who, in a way, is the kind of the antithesis of venture capital in a lot of ways, right? You give us an idea, we find 10 ways not to do how not to do it. So here's my view, right? If you're in a progressive sector, which is itself very dynamic in terms of change, right?
Mhm.
Whether you take AI, whether you take digital assets, right? These sectors are forming, right? Because technology is moving so quickly. And at the same time, you come with this accelerating regulation, right? In terms of saying, we got to be very progressive. We got to be the first country to do this. The first country to launch its CBDCs, X, Y, Z, right?
Mhm.
Don't you guys get worried that there is some sort of a systemic risk that we are running towards, that there could be a U-turn down the line when things mature and the cards actually get dealt on the table?
Mhm.
And how do you guys sort of factor that into your thinking as people who are shelling cash?
Yeah. So very good question. So when we think of investment thesis, um, thematically there are two things, right? You're looking for things that are tailwinds that are helping drive the investment forward, and so those are there. You catch on to the velocity of things, but you're also looking for things that are steady, that are sort of bedrocks of that investment, right? And so there, I would say things like consumer behavior is a bedrock, right? So when we are investing in stablecoin, for example, we are not investing because this is a stablecoin company. We are investing because that company is trying to solve something that was fundamentally broken, that needs to be solved. And now stablecoin provides a rail to solve it. Tomorrow, if real-time payments, right, by some miracle becomes another rail to solve that problem, probably the same problem can be solved. But because our company is anchored around the fundamental problem that needed to be solved, it will be able to absorb the new tool and will still again be the first to market, right? So the bedrocks have not changed, right? You still need to have a very strong problem statement that you're answering. You should have a solution set that benefits from macro and the tailwinds, but the solution set should address the fundamental customer needs, right? Like what we were talking about, like the needs of the globally mobile, right? So the smaller segment in past. Uh, Back in the day, HSBC expired Premier probably started with this theme. They have retrenched a lot. Citibank had an offering that has retrenched a lot, so on and so forth. So this need has existed for a long time. It was smaller need, more focused needs, and existing players retrenched. And you and I know, right? Like there are a lot of regulation that actually asked them to pull back. There's anti-money laundering, KYC, which pulled them back from this market. So there's an open need here to be addressed. Now, if stablecoin provides a rail to address this need, all for it. Let's go for it, right? But the company's anchor has to be in the customer need. The segment has to exist. They have to have unmet needs. Our product has to meet those needs, and to deliver that product, you can benefit from that rate. So that anchor has not gone away. Another anchor is founder, right? Like, does this founder really know what they're building, right? Why do they think they have the right to win? Tomorrow, do I see them ringing the bell at Nasdaq for this company, right? Can they? Do I think they'll stand up to the scrutiny of quarterly calls and all the investor interactions that happen for a public company? Who is a comparable public founder that I can stand them next to, right? So founder continues to be a strong anchor. Now regulation is an important theme that, hey, If you're a vigilant guy, then you will know that macro affects me a lot more now, so I should keep my ears open. But that doesn't change the founder quality, right? The market size that you're going after, that is an anchor for sure. The big change there is some markets are even harder to predict. No one 3 years ago, 2 years ago would have said stablecoin can get to half a billion number. Now that's sort of accepted that yes, it will get to half a billion number. What volume do you think will it get to? Does it really get to trillions of dollars? How many trillions of dollars does it get to? And how much of US dollar like in circulation will sit in stablecoin? That's the question people are debating. So the market size is really uh, exploded there. But the fundamental side that we need like a 5 billion, 10 billion, 20 billion market to actually anchor our thesis on, that anchor point has not changed. So some things that are fixed, right? And then the water sort of flows on top of it.
So let me bring you to my part of the world, Mina. Right? We talked about a few themes. You talked about, and I don't know if these are in your words infestible themes, but we talked about financial vitality for the masses. You talked about cross border. You obviously talked about rewiring of trade finance, whether it's on the back of on chain rails, which is stablecoin or otherwise. And I think you also talked about sort of AI led sort of credit lending. So from a MENA perspective, and we'd love to see a lot more of you and a lot more of your checks here.
Hmm.
But what are the kind of emerging investable themes that QED is like uber excited about or uber interested about? Let's use the word interested um, in this part of the world.
And harp on some of the themes because they are specific to region also. But cross-border, I think, is a very important theme, both on a consumer scale, so cross-border trade, cross-border affluent wealth in that sense, and cross-border payments. But also on the other side of it, which is for B2B, and as trade gets reshaped, it's a very, very important theme. And not just because of the commodities coming out of the region, but I think because uh, the world will increasingly need marketplaces where buyers and sellers can meet and trade in for lack of a better, in a safe and predictable environment, right? And the Middle East, especially UAE, is becoming a place for doing business in that sense. It was generationally ago as well, and so it's not surprising to see that re-emergence happen. Um, in South geographies like Saudi, I think because the middle class continues to become bigger and rising, I think all the themes that we have seen globally, right, in terms of neo banking, credit, insurance, will become relevant. Um, what we find is the regulator is far more forward looking and far more fast moving than we have seen in most geographies. And uh, because of the commodities boom, right, like there is a local pool of capital that can drive innovation, right? Us as kind of global investors, one thing we worry about is who writes the follow on checks, right? Are there investors downstream? Are there public markets who are excited about this? And frankly, in Middle East, that question doesn't arise because the region has enough capital to fund companies to glory, right? So in countries with larger populations, Saudi being a prime example, there is a you can actually have broader consumer depth in that vertical. The third bit is the population migration. I think the region is genuinely a big beneficiary of it. And so there is global banking kind of themes that become very, very relevant to that. Um, AI will become important. I think UAE released its first model, if I recall, 2 3 weeks ago, maybe a month ago.
Yep, it
I
is.
haven't looked at the scores and so on and so forth. So it's great to see a fundamental model come out. What I'm more excited is that it's able to attract the talent pool to build something like this, and that then is the real genesis. Whether everyone has a sovereign AI or not, I think is fine. Like I don't know to go into that debate because even open source AI is are fantastic tools and they'll only improve. Right? You can have proprietary AIs which are 5x, 10x ahead, but it no longer feels like if you're just relying on public tools, on open source tools, you'll be that far behind. I think it's the execution of AI that really becomes a significant driver. And if UAE in particular is able to attract that kind of talent pool, then there are great things to come in terms of all other aspects, right? Healthcare, education. Those are two sectors I'm particularly excited about, but a number of those, yeah.
Interesting. So I think just to add to it, it was actually I think Saudi which came up with the humane
Oh, sorry.
the
Yeah.
LLM tool. Yeah, right. But okay, so I'm conscious of time. I've got two questions. One more question which is related to I guess what we're discussing. Let's just touch on a little bit about exits and liquidity.
Hmm.
Right. So in the current environment, we've actually seen a little bit of a, if I may say, I won't use the word resurgence, but sort of a number of fintechs go to the public markets. Right. You had Chime, we've had Klarna, I think we had SoFi, and maybe a couple of others. Right. I forget the name. Right. As you see today, what do you see as viable, sort of attractive paths to liquidity? Is it all about IPOs, or do you start seeing some trade sales? Do you some consolidate? Do you expect to see some consolidation, or do you think that's highly sectorial and regional?
So in fintechs, what we are observing is IPO obviously is the preferred path, and to the extent that the public markets continue to be very buoyant, that is the most attractive path. That's where you get the best valuation, but also it sets the company on an independent trajectory to continue to prosper and propel forward, right? So we always prefer IPOs, and that avenue is certainly expanded. Um, the On the M&A side, what we find is becoming far more prominent is fintechs buying fintechs. So tech companies buying other tech companies. What we haven't seen as much of is, for example, banks buying fintechs, right? And there are exceptions, right? You and I last met in Japan. That's certainly an exceptional market where traditional companies buy fintechs to gain the edge in the digital world, and they understand the value of importing that talent and importing that culture and trying to keep it, like nurturing it, but not suffocating it within a big organization, so it continues to grow well. But I think Japan is one case study of it. I haven't seen that prominently elsewhere. I certainly haven't seen it in US, where
No, what we're seeing here, Sandeep, is I think a lot of the banks are now finally foraying into CVC. I don't think really anyone has kind of cracked it
yeah,
right here,
yeah,
but I think what they realized is that outright acquisitions leads to value destruction. So their logic is let's take a CVC call, let's have a blended sort of strategic financial outlay. If you're able to kind of use some of this fintech for our benefits, then great. If not, it's a bit of a hedge strategy. But I think it's early days here. And you refer to that sentence where you said, right, execution eats strategy for breakfast, right? In this part of the world, I say culture eats both strategy and execution for breakfast, lunch, and dinner, and all the meals in between. So I think we have to come up this sort of cultural curve,
right,
right, in this
for
part of the world,
sure.
right, specifically with the incumbent banking sector, because they've been perennially incredibly profitable, right? So there's really not been any burning platform to kind of change and transform.
Yeah, yeah. I think that's very true, especially in the geography, for sure, for sure. I think yeah, last I served that region was probably 10 years ago. I was a consultant then at that time. And then now we have been investing for last 5 years. And what we have seen is the ROAs that banks generate in that region are phenomenal, phenomenal.
Phenomenal.
So that creates complacency to innovate, which is great, right? Then there's more fintechs to be had. I think CVC is a very interesting angle to the extent that it identifies or it enables some of the banks to be more tech forward and actually take the leap of not just investing but actually acquiring companies. I think that could be a very, very important growth vector. But seeing the profitability in the vertical, I think it's it's a fantastic hunting season, right, for fintech.
It is fantastic, but my problem is you hunt, and if you don't know how to eat and digest what you hunt,
Yeah, yeah,
then it's kind of wasted carcasses, as I'd say, and then actually it becomes value destructive, not just for the acquisition, but actually for the entire industry, because you potentially take a good player, out of the market. So I think the way I see it, I'm not cynical. I think at least they've taken this step towards CVCs. Let's see who gets it right. I've yet to see one. There is an exception. There is a Saudi bank who kind of has done, I wouldn't say CVC, but they've kind of done something interesting, right? Where they've kind of carved out several businesses, created them, used them, and sort of generated sort of incremental, exponential value. But we'll watch it. My last question, sir, I'm going to really put you on the spot on this. Your views on the VC industry. What is systemically wrong about it? What needs to change?
Oh, yeah, I guess now I'm part of the problem. 5 years in.
Well, I'm not. I didn't
Uh,
say. You can just turn around and tell me, Arjun, there is nothing wrong with the VC
no,
industry.
look, I think one thing I would call out in the industry is over last 2 years specifically, I think funding has flowed a lot to the top five, top 10 names, top 15 names, whatever you want to pick by vertical.
Hmm.
But the curve has really sharpened, and folks are investing a lot of money towards the top. I would love to see a lot more distribution also, because this is, as much as the founders we invest in, this is an industry that has grown out of innovation, right? And I go really back to like when Sequoia was started and when Fanga Perkins was started. Those were not professional VCs or professional financiers coming to do financing. Those are operators who stepped into and identified that, hey, now that I have a little bit of wealth and have a little bit of influence, I can drive more money into other operators, right? And so I want to see more of that innovation come in, more of emerging managers come in who can get funded. Um, that would be the one thing I'd want to change. I've really seen that curve shift over last 2 years to the last 3 years, where financing is focusing a lot more on the top names. A little bit broader distribution is desirable for the vitality of this industry.
I get it. So, and I take two takeaways on that. I think one, I totally agree that I think we should have more operators in the VC world, right? One way or the other. I think the second bit is I think we should definitely diversify
Yeah,
the portfolio and a little less of this herd mentality where there is a couple of lead investors and then everybody else sort of says, okay, we'll just follow the leader. So there is I wouldn't use the Pied Piper analogy because that's not right, because the lead investor doesn't necessarily mean Pied Piper, but then there's a lot of money just locked up with the very few people. And I guess it's not necessarily the long tail, it's kind of the middle bit, which,
yeah,
which could read that scale capital, never kind of gets that scale capital and doesn't achieve it. Sandeep, thanks a lot. I appreciate this super early start for you,
yeah,
right? I'm going to be ending my Friday evening. You'll be starting your last day of the week.
yeah,
So I guess have a good weekend,
yeah.
right?
You
And I
too.
really appreciate you making it.
Yeah, always a pleasure talking to you, Arjun. Thank you so much for having me, and look forward to seeing you around the world.
Yep.
Yeah,
I'm sure we'll catch up soon. If not in Singapore Fintech Festival, then maybe in Japan next year or wherever.
for sure.
All right.
Take care.
Take care. So,
Bye.
ladies and gentlemen, that was Sandeep Patil, who's a partner with QED. As I said, QED is early stage fintech focused VC out of California. They've invested in some of the best known startups. I think this would be an interesting conversation for you to listen into, irrespective whether you're a founder or not. So do tune in, and I'll say goodbye and see you next week. Bye bye.